This is the briefing for Tuesday, August 22nd. In Friday and yesterday's briefing, I've been talking about the three-step counter-trend rotation that it appeared that the indices were in. And yesterday, I talked about specifically how the potential for a more complex counter-trend rotation was certainly there. And I discussed the fact that this was a three-step counter-trend rotation where leg one was approximately equal to leg three, but that if we had another leg down and then we could see potentially a third leg up where this would be a 1, 2, 3, 1, a second leg, and a third leg. And I talked about the fact that if this low was taken out, then that would suggest that this was done, or at least a higher probability that this was done. And I did the same thing with the Qs in the NASDAQ. And then I talked about the fact that if we were going to see a more complex counter-trend rotation where this was a 1, a 2, and potentially a 3, that the spiders would reach equality at 441. And you can see where they came in right at 441 in today's trading at the high. I also did the same thing with the Qs and said that the potential equality between 1 and 3 would come in about 367, and that's pretty close to where they came in today's trading. So basically, if this is truly a counter-trend rotation, it should be complete. The higher probability, or what would give us a higher probability that it is complete, is going to be trading below the second leg. So that would be about the 435 area in the spiders and about the 359 area in the Qs. So it's going to be important to watch what happens at least at that area. Now, that would then give us a higher probability that we're going to see another leg to the downside. And as we look at those other legs to the downside, then you can see that we've reached approximately the 430 area in the spiders, which is the next level of support. And then below that's going to be about 418. And I want to point out a couple things here in terms of the internals. You can see as we came into Friday's low here, you can see that we had a divergence in market breadth because this is S&P breadth, and it was about 200 shares positive. But you can see that based on where it was, that it was improving as we came into Friday's low, suggesting that we were going to see some type of move back to the upside. And I think we reached a point, if I'm not mistaken, of being close to oversold, but certainly not extremely so. And then as we've had the last 2 days of trading, where we've made a high above Friday's high and then a high above Monday's high, you can see what's happening with breadth. It's declining, volume is declining. All of this would suggest then that this is a counter-trend rotation. And the projections that I just went through would then suggest that it is potentially complete, and we should see another move back to the downside. Same situation has occurred in the Qs. You can see this is breadth in Friday's low, and it was a positive 191 or 200 shares positive, but you can see the divergence that was there coming into Friday's low, and then of course breadth falling off and volume falling off as we have rotated up in this counter trend rotation for the last 2 days. Now in the Russell, you can see this is really more of an impulsive move than we're seeing in the other indices. And then, of course, we have this rotation up. I didn't do this three-step counter-trend rotation. I didn't do the numbers in the Russell. But you can see that we've moved up off of Friday's low, volume falling off, and Russell breadth falling off also. Does this suggest that the market is not strengthening internally as it tries to move higher, but it is weakening internally as it tries to move higher? So basically, I want to go back to the spiders for a minute. So basically, what we need to be watching for is if there is any additional movement above today's high, then the potential for something else occurring is certainly there, and we'd have to analyze how price develops along with an analysis of the internals at that point in time. So this is going to be very, very important for tomorrow's trading. Now, I want to go back to the 15-minute chart. If perchance we trade above the 441, or I should say above today's high, then that's exactly what I've suggested just a minute ago on the daily chart, is that something else is occurring and we have to watch what's happening from an internal perspective. Now, while the probabilities are such that this is most likely complete, we always have to hold out that there's never a surety in trading the markets, but we have to look for the probability assessments, and whether the probability of one event occurring over another is certainly there. So basically, the higher probability is this is 3 steps, it's complete. The internals are not strengthening as we went into today's high. In fact, they're weakening. So that suggests that there is a higher probability this should be complete. Now, it's not 100% sure, but there is a smaller probability that it is not complete. And I would suggest that potentially there's a news event that could happen that would change the perception of value on the part of traders and change the internals as a result of that. And we do know that there is a meeting in Jackson Hole by Fed officials and economists around the world, central bankers around the world. So it's going to be very interesting to see if anything is said that would change this perception of value. So it's important to keep that in mind in trading tomorrow. Now, trading below this low today would then suggest, the low of today would then suggest that the higher probability is we're going to test the low of leg 2. And if that's traded through, then we're going to test this low. And if that's traded through, then the potential for another leg to the downside is certainly beginning. I cannot rule out the fact that while this was a 1, 2, 3, 1, this could still be a 1, 2, 3, 1. We could see another move to the downside and then a third leg back to the upside. Based on the internals, at least at this point in time, I don't think that is a higher probability. But at least in my trading, I try to, from a strategic perspective, to look at all of the possibilities the market may throw at me. That way, when one or the other happens, I know exactly what I need to do from a strategic perspective, and then start looking for tactical entries and or changing in my trade management strategies that I use. So basically, let's watch what happens tomorrow. If the low of today is traded through in the indices in both the spiders and the Qs, that would then suggest that we're going down to test leg 2. And if that's broken, then we're going down to test the lows from the 18th. I think that's Friday's lows. So that goes for both the spiders and the Qs. Now, one of the other things I do is I trade the Russell sometimes, but I keep an eye on the Russell because a lot of times it'll tell me whether there is strength or weakness coming into the market. So watch the Russell in tomorrow's trading because it certainly could give us an indication that we're going to see some type of move in one direction or the other, and especially if it is trading below 183. If the Russell breaks below 183 tomorrow, that would suggest more weakness in the market itself. And even if the other indices have not moved away from where they are today, that would raise the probabilities that they will break through today's low and we'll see lower prices. Anything above 441 in the spiders and 367 in the Qs would suggest then that the analysis is incorrect, and we're going to have to reevaluate at the end of trading day tomorrow. And one last thing I want to say is that while it appears that I hit the numbers exactly in last night's briefing in the 441 area in the spiders and 367 in the Qs, that was luck. And because we certainly could have traded a little above those key reference areas, or we could have traded slightly below those key reference areas. So it's not like these areas are exact points, but they're areas that we want to look to for potential change in direction. And certainly when we opened in today's trading in the morning and we saw no follow through and we saw the first 15-minute candle, no follow through to the upside, the first 15-minute candle was a down candle and then follow through to the downside. That gave me a pretty comfortable feeling that we were going to see 441 hold and potentially see additional movement to the downside, which is exactly what we got. So anyway, tomorrow will be a very interesting day, as most days are in the markets. But it's going to be very, very interesting. Watch these leg two areas especially. They're going to be critical going forward. Have a great night, and I'll pick this back up again tomorrow.